Thanks for tuning into this segment of the Global Inclusive Growth Summit on setting the global agenda for financial security. My name's Ida Rademacher. I'm a vice president at the Aspen Institute, and I lead our financial security program. I also co-chair the Aspen Partnership for an Inclusive Economy. One of the animating ideas behind this session that helped us select our speaker lineup for today is that financial inclusion and financial security at the household level is foundational to creating a strong, sustainable, and resilient economy. An inclusive financial system represents a really powerful economic tool. Research from the International Monetary Fund has shown a 2 to 3 percentage point GDP growth difference between, in the long run, those countries that are financially inclusive and their less inclusive peers. Over the past decade, we have made tremendous progress on greater inclusion through a series of actions taken by leaders in government, in the financial industry, and in the social sector. In 2010, the Group of 20, the G20, elevated financial inclusion to the global agenda with the creation and launch of the Global Partnership for Financial Inclusion. And in 2011, the Alliance for Financial Inclusion created the Maya Declaration, which was the first global measurable set of financial inclusion commitments made by nations. That has since perpetuated through the World Bank's commitments to help countries, and now more than 50 countries have national financial inclusion strategies in place. In addition, the World Bank launched the Global Findex, which is the most comprehensive data set showing how adults borrow, save, spend, and manage risk in over 140 countries. Technology and market developments have also been a big part of playing to the financial inclusion successes of the last decade. The new digital and mobile technologies, the emergence of fintechs, and the global dynamic and diversifying financial services sector is part of the success story of the last decade. But with momentum, the reason we are here today is to recognize that there is still significant work to do. Real challenges remain, and new challenges have emerged, reaching and serving a set of households and small businesses worldwide that are disproportionately led by women and people of color. And while reaching and including those populations is critical, simplistic measures of account access that we have defaulted to define success actually fail to capture whether that access is truly enhancing people's financial security, their well-being, their health, and their dignity. The conversations are designed to help us all think about what the agenda needs to look like for the next decade. As the world moves toward recovery from the pandemic, reshaping our financial systems will play a critical role in ensuring that in the next decade, and better still the next century, we have more success and a different looking system that is inclusive of everyone. To kick us off, I have the pleasure of talking with Her Majesty Queen Maxima of the Netherlands. Since 2009, she has served as the United Nations Secretary General Special Advocate for Inclusive Finance for Development. She's also an honorary patron of the G20's Global Partnership for Financial Inclusion, and she's a Global Agenda Trustee for the World Economic Forum's Global Challenge Initiative on the future of the global financial system. In all of her roles, Queen Maxima is a tireless advocate for expanding economic inclusion. It's a pleasure to have the opportunity to talk with her. Your Majesty, Queen Maxima, it's great to see you. Thank you so much for joining us today.
Well, it's a pleasure to join you. Thank you very much for having me, Ida.
In your role now for over a decade as the United Nations Secretary General Special Advocate for Inclusive Finance for Development, you've been one of the world's leading voices, not only on the need for financial inclusion as a way to address poverty, but also the way that financial inclusion helps with inclusive growth and with lessening of inequality. I am curious now, on the others, as we're coming out of a pandemic, what do you think the lessons the pandemic have taught us about financial inclusion, about how inclusive our financial systems are, and about how our systems need to be more inclusive?
Well, as you very well mentioned, I've been doing this work for more than 12 years. And in those 12 years, I think we've actually been able to engage 1.3 plus billion more people into the financial system. So in that regards, it's been successful. Now, the whole thing is financial inclusion is a means to an end, right? It's, you don't become better by being financially included. What I want with you when you're financially included is that you actually use it for your better outcomes in your life. And what do I mean by that? That you have a better possibility to save, that you can actually make ends meet, that you can actually make front to unforeseen shocks, being sickness, being droughts, being floods, and being able to plan for the future and being able to invest in the future. Is it education for your children, or is it in a small little company? And so the whole idea between financial inclusion is not just having access to affordable and safe and sound financial services, but to really use them to your benefit. Now, having said that, we still have 1.7 billion adults in the world that do not have access to financial services. And, even those that they do not really always make good use of it. So that we're talking, I hope in the future, about financial health. But also we have, very particular segments that are actually having much less access, and that's the equality issue that sometimes we're talking about. For example, 63% of African women do not have access to financial services. In terms of smallholder farmers, 270 million farmers need $290 billion a year in investments to really make their farms grow, but 70% of that demand goes unmet. So, I think these are the type of things that, we need to start looking into a lot more. The needs of women, the needs of smallholder farmers, and the need of micro, small, business enterprises across the board. And the other very big issue is once you're actually in it, you're financially included, that you really are financially healthy, that it doesn't go into over-indebtedness, but actually into more cushions, more buffers, and more possibilities for your future.
I think that economic dignity at the core of what you're talking about is it's been evolving as a more and more front and center focus of financial inclusion. And the work that over the past year, I want to call out, you have chaired an international working group on financial health. And I've had the fortune and pleasure of participating in that. And simultaneously, here at Aspen, we have led an effort around defining a next generation set of principles for global financial inclusion, and your team has participated in that. The headline coming out of both of the reports and the work on both sides was this call for outcomes, was really trying to set a new standard for reminding everybody of the purpose of financial inclusion, to what you just said, and to really kind of put that forward as the next generation goals when we think out to the future. When you think about the ensuring of the adoption of financial health, financial well-being, and outcomes orientation, what do you think it's going to take to move us toward adoption of that? Because it is much harder to measure than access.
First of all, you cannot measure something if you cannot define it. So the first step in this working group that it's already some years I had it in my mind, we have to have like a working group. There's no clear global definition of financial health. So that's the one thing we actually were able to sort of establish together. And then we have discussed about what are the KPIs that, we should be measuring financial health with. And also, the situation in the Netherlands will be very different than actually in Côte d'Ivoire. So, but if we can actually come up with a normal standard set of KPIs in which we can actually see outcomes. Are people becoming better by using these financial services? And let us be honest, in the US, 90% of the people are financially included, maybe underbanked by some of KPIs, but the one thing we know that only 30% feel comfortable in their financial lives. They do not have financial stress. The same thing goes in many, many other countries. So we're seeing this in emerging markets as well, that, sometimes financial inclusion might actually lead too much to over-indebtedness and not enough to what we want to actually have as an outcome, to have actually better buffers, built for your future, and actually have a very balanced financial life. So, in all OECD countries, half of the respondents, they made a huge survey, and half of the respondents said that they actually have trouble making it to the end of the month. 50% of all OECD respondents. So there is something we need to talk about, which is what is the job of a financial sector. So the Aspen principles are very complementary to the working group that I did on financial health, with the participation of everybody in the community that talks about financial health. And to see, what are the KPIs on your clients if you're a financial service provider? What are the KPIs that I need to look for? How do I nudge them to save better? Is that insurance really something that he needs, or he needs another type of insurance? And so it is threefold that we need to do. First of all, speak to policymakers, because, they will need to do the very big surveys and really analyze, what type of groups are being left behind, what type of policies I will be able to do. Also in the product, when you accept a product, a financial service product, is this going to lead to better financial lives, yes or not? But also from the private sector perspective, it's extremely important that we are going to create a platform now, and I'm very happy that MasterCard are going to be participating, in which we're going to start to share ideas and share ways of actually, how do you get this data of your clients? How do you get, where it's hidden sometimes, this data of financial health? How do we get it, first of all? And how do we actually start testing products that are actually going to turn into better outcomes? So these two things are very important. And lastly is to keep on this KPI conversation and start to get, this data collection in a much more rigorous and I would say consistent way. Without this, we'll not be able to make policy, we're not going to be able to make advocacy, and we're not going to be able to make change.
I think that with the continued leadership that you have demonstrated with the CEO partnership that you have been spearheading, there's a very robust next chapter, because the next step for leadership is what will change that measurement in an upward trajectory. How will you get people experiencing more deeply stable, secure lives with a lot of choice and agency in them, because we not only understand where the starting point is for their financial health, but what systems need to be addressed to help to drive that. I think one of the other reports that came out from the Edison Alliance and the World Economic Forum that had another set of principles, which are also really, really great compliments. But one of them really called out the way that technology, when it was designed and deployed right, accelerated financial inclusion during the pandemic. And that a lot of the ways that happened was because of private sector innovation, because of public-private partnerships that were the basis of next generation infrastructure for financial inclusion, not just in individual products and services, but in safety nets in countries. So there was a whole lot of ways that public-private partnerships have helped move the ball forward. There's more work to do there. And again, you are already leading some of that work with your CEO partnership. I wonder if you could just reflect for a minute, if we need to work across sectors even more to move the inclusion conversation toward real deepening of financial well-being for people, what additional ways do you think that leaders need to work across sectors with each other?
Yeah, first of all, I want to say that I love all the CEOs that are working in my CEO partnership, because there are CEOs that really want to make a change and they really feel very strongly about this. And when we speak together, we're all extremely excited and committed and very sure it's going to come by. But when you actually go to the last mile in a country like Pakistan or India, it becomes quite complicated, because we've actually figured out a couple of things. First of all, that not one company can do it by itself. It's very difficult. There's what is actually making us not really including anybody. It's a cost of actually going the last mile. It's sometimes the perceived risks. It's a lack of infrastructure that is actually there. Sometimes in connectivity, roads, etc. So it is extremely expensive or very risky for companies to go by themselves, and that's why this issue that you were just talking about, the public-private partnerships. The public has to have this digital public goods and these public goods in general, so the companies can go out there and serve the clients with something that would actually change their lives. And so this is an important thing. And, that's why the Edison principles talk very well about sort of interoperable payments. But, I always talk about sort of everybody having an ID, having connectivity, some digital literacy, some financial literacy. These are things that are, prerequisites for us to be able to, deliver good products. And then the other one is maybe I am the telecom company reaching to the mom and pop shop, the little merchant, but I don't sell them any goods just other than data. But this other one that is selling goods is actually also in this silo, having this other relationship with the mom and pop goods. And then there's another bank that's actually had this other siloed relationship. And none of these relationships are actually as good as they could be. So the whole idea is to actually us getting together and be able to serve that person, because the mobile money operator knows how much he's actually dealing because of this transactional data. With that, I can actually give him insurance by which, he will not actually have enormous risks whenever something big happens as a shock. And at the same time, if, you actually have a consumer goods company that is actually selling them, well, we can actually improve that service as well. So that's the whole idea behind it. Now, some lessons learned is that not only the CEOs need to be very committed to this plan, but also the whole companies to be committed to this plan. And above all, the local CEO and the local management. Because if we don't have that and they don't have the right KPIs for them, that they will actually be able to tell the board, I did very well in this country because I needed to digitize all the mom and pop stores. It will not happen because they will need to have the commitment themselves. The other thing is to actually have dedicated funds and staff to also do the market research, because it will mean actually thinking outside of your box. It's if I'm selling shampoo sachets from Unilever and all of a sudden I'm talking about financial services, the person having that relationship with the mom and pop shop, he will have to think in a completely different way. So it means actually start looking into other types of products that will be convenient to the clients. I think that's the one thing that we've actually learned is commitment across the whole company, and you have to have KPIs that actually will follow this up, and you have to have dedicated staff and resources to make it really work. And it's actually a question of, investing. We've had a wonderful story. I think that you've actually heard from us, MasterCard, Unilever, AXA, and a local bank. And what we did is basically a lot of these mom and pop stores could actually have much more access to inventory credits because of the cooperation between the three companies. And these merchants did thrived. And all the AXA and MasterCard and the local bank and Unilever actually saw their business grow. That's the other thing. This is not CSR. It should be a business. Because if we don't make it a business, it's not sustainable. So, and that is the one lesson learned that we knew already was at a COP, but, now we have to really get it sort of, as across the company as a whole. But certainly in the pandemic, I think it's a very good lessons learned. I think that right now, I don't need to say that financial inclusion is an important thing. 10 years ago, I really had to sort of advocate for it. But nowadays, we spoke to so many countries, things were going very well. Now the pandemic, all of a sudden, a lot of countries call us up, how do we do this? We need to do this very quickly. And all of a sudden, all these barriers that seemed unsurmountable before, became very easy to overcome. And all of a sudden, we're having all these fantastic social safety nets being paid to women when the whole pandemic started. So it is doable. We just need to have the commitment and the energy and the strength to do it because we know how to. So it's a question of really commitment and really want to be more creative to jump across the lines between public and private and between private sectors as a whole.
I love the way that you have just layered on almost an entirely new addition to the agenda for financial inclusion. And I think that there's a growing set of leaders who are listening and wanting to think about more that they can do in this space. When you think ahead 5 years, do you think that there is a particular headline or success that you'd love to be able to say next time you come and join us at a Global Inclusive Growth Summit?
No, well, I still dream that, for example, all individuals will actually have one place where all the financial data is in one place, so that he or she can actually try new products and see, is it going to improve my life or not? Right now, sometimes the financial lives of people are just so disaggregated between, a car that I bought in installments, a house that I bought with this bank, another credit card here. And so, we've made actually sometimes the financial lives of people so complicated. So simplifying and aggregating them will be my biggest dream. So it can really, that financial service providers could actually sort of, try to pitch, listen, I have a product, but then he can really choose, because right now choosing is extremely complicated for most of the people.
Yeah, well, I love that vision. I think there's a lot of others who will be nodding their heads and participating in this summit that are on board with that vision. And I'll leave you with the final word.
Yes, well, if you're not a service provider company, you still have employees. And also we know that a lot of employees, even if you pay above the minimum wage, they're also suffering with financial health issues. Please look at that. And we have had, developed a whole set of measures and things that you could actually do to actually take care of employees properly. So it's not only the financial service providers, also normal companies can actually look after their employees. And we hope to be able to do that for SMEs in the future.
Thank you so much.
Thank you. And have a good day.